Hello guys, and welcome back to a new video and to a new NQ market review. So it's been some time since I did this kind of videos where I explained the trades that I took and walk you through today's price action. But today's price action was really interesting, right? There was some interesting moves that we can extract some valuable information from, right? And so this is the two trades that I took, right? Using the system that I always post videos about, right? I don't change strategies every single week like some mentors, right? All right, without any further introductions, let's just get into it, right? First of all, let's go to trading view and walk you through the higher time frame first of all. So I don't usually go to the daily time frame to frame my trades, or even the weekly time frame, but for this time, let's actually do this, right? I don't need it, but if we are trading maybe the 1 hour or the 15 minutes, so this is how the higher time frames looks like. So maybe you took some trades on the higher time frame today, and this might help you to determine what you did wrong. All right, so let's do the NQ continuous chart. Because if you only choose the current contract, it won't show this price action right here. So this is the current contract. Right here. If we clicked on it, we're gonna get this, right? But let's choose this one instead. So what do we have on the weekly chart? If we refer back to the model that I always share with you, this is the one that I use on the higher time frame and the lower time frame to execute my trades. So as you can see, we have zone, we have this low, sweeping this low, failing to close below it, and then the CSS happened. If we now go to here, we can see that we have this zone right here. We also see that price swept this low right here. This is the first stop. The break of structure happened here. Price put in first stop right here, trading higher. One more time, sweeping this low. And then closing back inside the range. So right here, as you can see, same thing, right? And then here, the CSS happened. So in the upcoming weeks, we might see, we're either gonna see just continuous run to the upside to take this high, or maybe you're gonna see a reject a pullback to this whole range, and then another push to the upside. But this is the target, right? This is the target, the all-time high. So by just looking at this huge rejection and failing to close below this low from past week, we can expect the current week to be expansion higher, right? Based on, first of all, we are inside this zone, so we are expecting a rejection. Second, we swept this low and failed to close below it. So the favorable move is to upside rather than the downside. This is how you trade with probabilities. Do you think that price is from here is gonna run this low or this high? All right? The probabilities say that it's likely to run this high. And this is the final target. So this is on the weekly time frame, right? So we can expect a higher movement. If you go to the daily, so again, I don't use this at all, right? I don't use these time frames to determine my 1 minute and 15 second trades, but this is how you framed it, right? On the daily, not much to work with, right? We have some CSS right here. Referring back into it, as you can see with this candle, and then beautifully to the tick, and then trading to the upside. Okay, so this was the higher time frame. Now let's go to the previous chart, the current contract, right? And let's analyze today's price action. So on the 15 minute, we don't have a lot of zones left to work with. So in this case, you want to go to the lower time frame. You can either work with this fractals, but if you go to the lower time frame, it will be much clearer. For example, this. All right, so the 5 minute, we have a beautiful zone to the left right here. from here all the way to here. Price swept this low, just like the weekly time frame, right? We don't have close back inside the range, not a wick, but if you go to the 15 minutes, not really, but you get the idea. First up, liquidation of the second top inside the zone. Now we're expecting price to go higher, right? And also pay attention to sweeps. So price likes to sweep previous low before each expansion to the upside. So I always annotate this into my charts. So I know that price is likely to not take the lows that swept previous lows. This one right here, so as you can see, price headed to the upside and then came back, never took it, and then took it to the upside. One more time, sweeping this low, came back into the previous range, and then another expansion to the upside. So sweeps, very, very important. So trading to the upside, and I usually trade after 10:30. On the 5 minute, we didn't. So on the 5 minute, we had a really nice trade from here. We have this fractal right here from here to here. We swept this low, and then the CSS happened with this candle, right? This was on the 5 minute. On the 1 minute, it will look like this. So if we apply the same logic as this picture right here, first low, second low, and then the CSS above this candle, so it will become like this. So here's the CSS above this candle, but unfortunately I put my limit order right here and I missed this setup, right? So unfortunate, but it was beautiful, and I know that there is going to be a lot of setups during the day, so I didn't lose my mind right here. All right, so beautiful. And also we have all this smooth edges, right? Here, here, here. So this is what you want to see when you want to take a trade. You want to see these smooth edges to target, and we have also one right here that we're going to talk about. So this was the actual trade, a beautiful trade, but a missed trade, unfortunately. So moving on to my first trade of the day, which was around 12:45, but I took it on the 15-second. I don't have the 15-second here. I don't need it, so we need to go to NinjaTrader. But on the 1 minute, we have a beautiful zone right here. We also have a couple of sweeps. Price returned back to the 30%, and the magic happened on the 15-second right here. So let's go to NinjaTrader and walk you through the first trade. Here's the first trade, as you can see from here and from here. And this is the 15-second time frame. So if we add some annotations into the chart, right, we can see that we have this zone right here. Price dumps into the 30%, and also we have the liquidation, a sweep below this low right here, and then failed to close below it. So one more time the model. So I usually don't take these kind of lows into consideration. So as I told you, there is two types of lows. A low that is very obvious, and it is part of this leg from here to here before the break of structure. And the second type of low is that happens after the break of structure. For example, this low or this low, right? I prefer these lows, but this low right here, although it is not very obvious, but it has a significant, which is this right here, this zone from here to here is the SNDR, or the zone, the last move to the downside that broke structure before the break of structure. So this is the one responsible for the break of structure. So these are all DTFX, right? Beautiful break of structure, and this zone was responsible for it, right? Price traded to the downside, and it failed to take the low of this zone right here. So this is something they've shared recently, right? Which is when the SNDR gets violated, price hits back to the origin of the move. Price is likely to hit back to the origin of the move. So this is the SNDR that broke this high. If price violates this, price is likely to return to the origin of this whole move to the upside. But here, price fails to violate the SNDR. We have only sweeps. So that tells me that we are likely to have another expansion to the upside, right? We're going to have a rejection. The SNDR is actually offering support. So based on the model, we have the sweep on liquidity. We have the fill to close below it. And this is the CSS. So I took my entry from here, stop loss here, and then I targeted this. Yeah, I know I'm still working on my targets. I'm gradually elevating my RR. So I started with 1 R, now I'm taking 1.5 to 2 R, sometimes 2.5 Rs, right, on the trades. But again, this is real trading. This is not fake Instagram traders where they constantly take 90 R trades, right? This is real trading where you find your demons every day. You fight in greed, fear, right? So the only way I can see to elevate my RR, my targets, is by doing it gradually, right? Step by step. When I gain confidence with 2R, with 1.5 R, I gonna target 2R, 3R, then 4R, right? This is how you do it. So this was the first trade, and as you can see, just like if we go to trading view, I want you to notice something, because this model happens several times per day and on every time frame. Zone, sweep of a certain low from here or here, failing to close above it, CSS confirmation, and we have all this smooth edges to target. Zone, fail to close below a certain low, CSS, and then look at this. Look at all this failed swings to targets, right? Beautiful. So this was the first trade, and now let's move on to the second trade, which was right here. But this was on the 1 minute, so let's use trading view for this. So this one was a bit tricky. So as you can see, if we zoom in, so this first trade happened here, and the second trade is somewhere around here. So as you can see, this price action, a lot would call it choppy, right? And it is choppy for the untrained eyes. Price is going back and forth, taking both sell side and buy side liquidity. But if we look closely, we can see that you can see that sweeps are the key to navigate these markets, right? Sweeps using this model right here also. First of all, we can see that we are inside this zone right here. That's the first thing. This is how you build your trade idea. You can see that we have a sweep on a low here, right? And then what happened? Price broke at this candle, and this is the CSS. Let's change the color. Sweep, and then break below it, above it here, return back to it, first stop, and then trading to the upside. And here we have the break of structure right here. And then here we fail to take the low. Okay, we fail to take the low. We fail to take the high, all right? So this is the model happening on both sides of the market, here and here. And I want you to notice that how these two setups are delivering to each other. So here we also have that CSS below this candle. So follow along with me slowly. Failed, and then the CSS happened right here. Price started trending to the downside, topping into the previous CSS, and also failed to take this low right here. So the model is happening one more time right here. and then also the CSS here. Price rated to the upside, tapping into the previous CSS, and this CSS rejected the price to the downside. To where? To the previous opposing CSS. So I took my entry from here, and I was favoring the bullish CSS because we are overall bullish and also inside this bullish zone. So I took my entry from here, my stop loss here, and I targeted this high, or maybe this, I don't remember, I believe this high, for 1 to 1. And this is not something random, this is not hindsight, this is not something that I just invented. I talked about this in my previous videos. So if we go to my previous videos, so this video right here, I'm going to show you an example, and you know that this is not random. So same example, guys, we have a zone, price swept this low, right, sweeping, and then we also have a sweep to the upside, price returned back into here, right, another sweep, return back. This one, this CSS is offering pullback to the previous CSS, which is this one right here. So we have this sweep and then another sweep, and then eventually price rated to the downside, continue the trend, continuation of the trend. So we are favoring the bearish CSS in this case. Let me show you another example. So there you go. This is beautiful. This is the CSS here. This is another CSS, right? And these are the bullish CSS with sweep. And here's another example. So as you can see, we have a sweep right here. This is current CSS. And we have an opposing CSS also right here, bearish. And eventually this one that pushed price to the downside. So this is a proof to you that the system gives you opportunities both during trending markets, quote-unquote high probability conditions, and also choppy conditions like here, the least favorable conditions that people don't like to trade it, right? So you can apply the system anywhere, right? So I believe that this is the end of this video. If you have any questions, leave them in the comments. If you found value in this video, right, leave a like. And now happy trading and good luck.